Welcome to Trading Lounge and the US indices for Friday, September the 9th. And on the SPX here, just going back to the beginning here in this area through here. So this was the Great Depression through here, and I know it was devastating, but when you look at the chart, it didn't seem to sort of last that long. But I guess when you consider, it recovering again, at least halfway or a third of the way up the trend here, it does take, a good 10 years in that case, so that's sort of interesting. Yeah, and just counting this up here as 1 and 2 and 3, and looking up here for 4 up here. And this is a log scale chart at the moment. So let's just open this up. But we looked at this in the stocks video the other day, but not in the indices video. So I thought I'd just better quickly go over it because not everybody watches the stock video. So I know in most cases folks have got this as wave 3 over here and a wave 4 here. But it's kind of interesting when you compare this to the NASDAQ actually. So in this case we have made a little top here, and this market has taken the bottom out of this one here, but on the NASDAQ it didn't do that. So I've lined this up with the NASDAQ. That's what I've done there, and that's the reason I've done that. And then you can basically fit the two counts together and sync them in much better that way. I know it's a little bit unusual, but it fits quite well. So yeah, as I mentioned, this is a log scale, and the reason I'm showing this for is because there's a few different scenarios that can play out here. Now I know that we can look at this as wave 1 here and come back for an ABC back for wave 2, so to go up at this point. So on the charts that I've had before, we've looked at this as wave 1 top, and then but also a wave 3 top as well, having an ABC coming back to this point here and then moving up from that point. So I'm mindful of just having a 3-wave swing here. Currently we've got 1 swing in here, and we've got the corrective rally here. The corrective rally may get a bit more complicated in here. It's possible that we can just have that top there and we can come down in that. We're going to be, we're observing that, and we'll be, we'll be prepared for that short trade just coming straight down from the top there. But also it might give a little dog leg, so the A wave up here, the B wave and the C wave, and then come down. So I'm prepared for that as well. So, but the main point is we'll either come down in either the A wave here, so the A wave to here, then the B wave and the C wave here. So we'll come back to around the 3,000. Look, it could be 3,300, but it doesn't really matter at this point. There is good support in this area, and then we could move up from that area. So that's pretty much one scenario, and you could label this as a top of wave 1 and back for wave 2 here, or you could have it as a 3 and a 4 here, and I won't go into all that at the moment. But the other bigger sort of scarier picture is considering this move from wave 4 here to wave 5 up here as being completed, and then having a bigger wave 4 to come back. So that would be a wave 4 coming back from, let's just cruise in here a little bit further. So from this low down through here, looking at this as 1 and 2 here, and then looking at 1 and 2 and 3 and 4 and 5 to the upside here. So normally you would think that this wave 4 would come back to this wave 4 of 1 lesser degree here, so that would bring the S&P back to 7, whatever it is here, 650. But none of these, this wave 4 here, and not even this wave 2 here, didn't pull back 61.8%. So on log scale, well, it doesn't really matter if it's log or not, it's still the distance. So basically, let me just get this in here. It is on log scale, so it always looks a little bit weird, but at least we can fit it. So taking this from that wave 2 here to this wave 3 here, the 61.8%, it's basically pulled back to here. So I'm taking that as a bit of a blueprint, and then looking from this wave 4 here as well. Let me just do it another way as well. just want to check, just doesn't have to be perfect, but yeah, that would still bring us back down into this one here. So yeah, so what occurred here in terms of retracement levels, we would look at the same sort of blueprint for the next one, and we could probably even do it with this one in here as well. So I think, you know, this pulling it back to the not the one wave for one lesser degree, but actually of 2 degrees here, that would be how the trend has performed in the past. So that would bring us down quite low, you know, and you know, I mean, from what we can see in the world at the moment, that's you know, that's all sort of doable, isn't it, really? I mean, a lot of these issues are not resolved, and you know, the amount of money they printed, and you know, the amount, I mean, basically, you know, they printed this, all of that was printed money, you know. So do we come back to that point? You know, does the money they put in, and now the tightening, does that balance us back out here? And do they need to do that to do inflation, you know, to handle the inflation? Do they need to do you know, what they did in the 80s, you know, either put it up really high or put it up nice and firmly at, you know, at a much higher figure than it is now, and hold it there for longer? You know, is that what's going to occur? I don't know, you know. And then there's the whole sort of China situation, and everybody's all a bit edgy about everything, isn't there, you know? So it kind of fits in a way, having a larger correction here. But as traders, this leg here, this would be the most devastating one here if this was in a third wave coming down here. You know, I'm looking at an ABC pattern and then pushing up, but I also need to be aware of 5 waves down here. And if we do get 5 waves, then we'll have a correction and then another 5 down here. So in this case, this particular move here, this would be the devastating one. It would come down pretty quick at that point. And obviously, as traders and investors, we want to be, you know, we need to take advantage of that, you know. So that's basically what we're aiming to do with all of this. So yeah, I mean, if we go to I'll come back to this here for a moment. If we go to, first of all, let me just go to the daily chart. Let me just check this in. That's on 5k ticks. I need to remember that. So let's just go over a few things here at first. So from the top here, it is possible to count this down as 1 and 2 and 3 and 4 and 5 here. That's doable. There is a bit of overlap on all of that, but you know, we've seen all that before. So that is possible, but I've got it as an ABC at this particular point. So I'm just looking as an A wave, a B wave, and coming down for the C wave around the sort of above the 3,000. But we need to be prepared that the market could come down further. And in this case here, I'm looking at it in a couple of different ways. First of all, we can have it as an A wave here, and then an A, B, and C wave for the B wave here, and then look at this as wave 1 here and 2 here and 3 here and come down. So we're prepared, you know, for this rally at this point. So we're also looking at this here as just a chuck a spanner in the works. I'll just adjust this a little bit. We're also looking at this with a B wave over here and a C wave over here, and looking at this as an A wave here, an ABC here for the B wave here, and then a move up. So I can't rule this out just yet. So we will be short on this leg coming down here because it could come down further. So we won't miss it. But otherwise we'll be looking down here and then to the upside here, and then coming down into wave C at that point. Because my beef with this is that this here as an ABC here to rebalance this trend, it's still a little bit small compared to all of this. So it's quite comfortable for a B wave to step out of here. But at the same time, I'm also aware that the market has retraced to the 50-60% 50-60% area in here, so we need to, you know, take it on board there. So I need to look at both counts. So, and we will need to, you know, look at this here also as wave 1 here and 2 here. So we want to be able to catch this particular move coming down here, just in case it, you know, comes further down, but we'll be, you know, just be mindful of that. So I won't go into that any further, but this particular move that's moving back off the lows here, as we talked about before, it came down quite quickly here, and you know, people, you know, be lower volume coming up here, and it turns and takes out stops and moves quite quickly for a little bit. Then the Feds had their 2 cents worth and moved pretty quickly at this point, and then it's been slowing down here. So we know that it's been slowing down. So we were looking for a rally. The count in here is a little bit a bit messy, and it's different between the cash market, the SPX, and the futures market as well. And I want to point that out today. But what we need to do is that you know, we don't always get it right, so we need to be a little bit mindful of how we go about things. So because we're looking for a move lower here, then we just basically need to start from the low here and look to short. Now obviously as this rallies here, we'll be able to lift this up further and further. We want to lift them up to safe places. We don't want the market coming down and clipping our ticket and then taking off again. We want to, you know, be clear. So we probably won't get the optimum shorting spot, or probably get close to it, but you know, the main point is that we're on this move that could come lower down here. It might just come down into group 2 here, where this has come, and get a bit of a double bottom and a bounce from that point. So, but still, if it does come down here, we, you know, further down here, we want to be prepared. We want to, you know, we want to have a strategy for getting lower. We just may not come lower, that's all. Or we may come down really quick. I mean, anything is possible at this point, but we just need to be prepared for it. So, you know, if we were going for long trades, we just technically buy new highs. It's safer. And if we're going to short, we just buy new lows. Sure, we can sell into rallies, but we need a good reason to be able to do that. So anyway, let's just cruise in now. Enough waffling on there. So this top up here could be wave A or wave B. Okay, so if it's going to be wave A here, then we're looking for an A wave here, a B wave here, and a C wave here for the B wave, and then go up for this C wave over here of a larger B, and then go down from that point. We're also aware that we can come down as wave 1 here and go back for wave 2 and then move down. Now the important thing is that opinions can get you into trouble, be it somebody else's or be it your own. So we need to take all that on board, because markets are emotional, and as I mentioned, that whatever happens at this stage, we would need to be short below this level here. That makes sense, but that's a long way from the black stump, so to speak. So we need to find a way to get closer to that. Now, if this move down through here is wave A or wave 1 here, then the 50-60% retracement level's back up here. So that's a long way away, isn't it? You know, and the thing with patterns, if we were going from A to B here, then at the beginning of patterns, sometimes they're nice and clean and you can work them out, and other times they're rather complicated and a little bit sort of iffy. But as things mature, they become clearer and clearer. It's like all this was messy down here, and now we've got this move coming up here. Well, it's kind of clearer that we've got to have a low in place. Now the low hasn't finished off the way that it's nice and neat for the futures and the cash market here, because the cash market's got this as the low right here, okay, on this low here. So we could look at that as wave 1 here on the cash market, the SPY or the SPX, and then come back for wave 2 here. But we can't do it on this market, can we? I think if we've got the SPY here, yeah, so you see the SPY here, it's got this, we could look at this as wave 1 here for this, you know, and then look at wave 2 here for that, right? But on the futures market, we can't do that. We can't look at that as 1 and 2 here. The other thing is, do we look at this a bit differently then? Do we put this over here and look at this as an A and a B and a C wave and don't go up here? We just find 5 waves here and then we come down from that point. If that's going to be the case, then that's why we've got this here on the low here. Now we could just drift this up a little bit further here and probably bring it up a little bit further, or what we could do is we could look for, in terms of trying to get closer to the market in that case, is we look at this here and we go, okay, well that's the 61.8% at this point, so we can just put that in here. So if the market was going to come back, we wouldn't want to short it in the 61.8%, but we would want to be looking for that area there to become the resistance. So we could put this here and then we could just gravitate over to the closest largest numbers. Well, 5 is the second strongest number, so we can put that 50 in there, but it still doesn't get us out of the woods here. So from 900 to 4,000 here, the Fibonacci numbers of 1, 2, 3, so 30 here, that brings us there. So we could say, we'll put the 20 there as well. So I know that when the number 2, I know it's 20, but I always just call it 1, 2, and 3 because I'm just a simple bloke. But I know that if the market's been above here and the number 2 here, the 20 becomes the retested resistance, then it would be short from that point. It will be pulled to the closest largest number, which would be the 900. If it pulls to that, well then it's likely to come down here, bounce off the old lows, come back, and then go down at that point. So it'll be something like that, but at that 9.2 there, that it's over at that point. Now I can see from here, for example, that this needs to go higher anyway. So 1, 2, 3, 4, 5. So that will be up here somewhere. So that means that will be in group 1 up here. So we can put the 50 in here, and then the 30 would be here. This is group 1 is again, so 10, 20, and 30 in here. So that's group 1 of the 4,000 area there. So it's probable that we could have 1, 2, 3, 4, and 5 here, and then have, let's just take it from that point just for a moment, because we're basically trying to find a way to go short, and we're just being prepared that, well, the market might just come to this point here in 5 waves, because of this here as an A and a B and a C, and come to here and then come down from that point. So now the 61.8% is at the 50%. So that makes it even better. So that means that we could remove this, and we could put the B wave here. But if that 50 became the retested resistance, then we could look to short it at that point, and we would be needing a thing. If that was the 50 here, we start from the low and then build up. The market can come back up above the level, then you need to go through this process again. You need to short new lows. That's the safest way to do it. The other point here too is that when you've got the length here, let's just say we've got this length here, wherever it is you take it, so the 60% here. So what we can do in this case, we talked about this yesterday, when the market comes down to the 61.8%, then what we can do is, what you need to do, if you can do with this, is you'll need to ask yourself, has it come to the 61.8% in 3 waves, or has it come to the 61.8% in 5 waves? So probably, if you understand the levels, we'll be in group 2 there. So it'll be 65, 72, and 80 for wave 3 and 4, and then down here. Because if it comes down to this point in 3 waves, well, then you know that it's going to go up at that point. If it's come to the 61.8% in 5 waves, then you know that it's going to have a corrective move and then go up from that point and then come down. So then you'll be able to look at shorting the B wave here, because this will be an A and a B and a C wave here for this. So what we've done, we've edged from the 320 to the 950 to this point for a safe trade. Now also too, because if you can count those 5 waves and you recognize it's 5 waves to the 61.8%, well then of course you can take those 5 waves here and look back for the 50-60% here, and in that box then you can look to short in that box based off those 5 waves here. And to the degree of your confidence will be the degree of how much money you can put in that box. Okay, so now we've got a better position here already, haven't we? We've worked our way, but what we've been doing is we've been working up from the bottom all the time. So we don't get the best price of shorting up here because, you know, that's, well, you know, the money's in the turn, don't get me wrong, and you can do that and you can do all sorts of things. But the trick is not to lose any money. Now, obviously we all lose money in this game, and it's, you know, it's a part of doing business. If you had a veggie shop, well, some tomatoes are going to fall off the table here and there and go rotten and all the rest of it, aren't they? So, you know, but you want to keep them to a minimal. I mean, I don't mind a small loss, but they kind of annoy me because it takes time to recover from that loss, emotionally and financially in a way. So that's sort of where we are at the moment. So I'm thinking, just generally looking at things, is that it is possible for the market to come down from that point, don't get me wrong, but I'm thinking that we're going to be looking at this B wave here. We're going to have an A wave up here, a B wave here, and then a C wave up into this space up here. Now, we may not pull back 50-60% here either because of 4,000. It's a big number, and it's like a magnet, and you can see that the market's sticking to it already. It's going to be hard for it to leave it to move up there. So then also with all of this as well is that we can look at group 2 a little bit closer here. So that will be 39.65. That'll be 39.65, close enough, and we can put that in also here at the 72 number as well. So 72. So what we have here, this is the, I mean, this is a medium level, it's a big number. If it was a minor level, then it would be slightly different. I'll just shut up for a moment, but that's the initial swing range of being at that number. It can swing outside that, but that's the initial one. So this B wave here might end up just coming back into the 60, say, you know, from 60 to 65. Right, so just be a little bit mindful of that as well. Yeah, so that's a bit of a long-winded sort of story there, but that's how that is. So it just depends on how you want to count this low. Do you know how things play out here? I mean, we're just not up in the box up here. You know, not that we have to, but you know, we may even fall short of that. But it seems a little bit, this whole corrective rally, even if you included this as an ABC here, it's still very small for this trend that's occurred here. So we're just going to give it a bit of time, but what we're doing is we're prepping from the lower end. Okay, I think that's the safe way forward, you know. Okay, all of that said, this is the SPY here. So we can look at this in terms of, I'm thinking it counts better like this with a bit of a running. We don't really get a running flat that often, but there we go for that. Just borrow that. So I'm thinking that this is just the SPY, of course. So counting this as 1 and 2 here, this seems to me to count as an A and a B and a C with 5 waves in it here. So an A wave, a B wave, and a C wave. Here's a running flat, and then basically 1 and 2 and 3, 4 and 5 coming up here somewhere, and then the A wave, the B wave, and the C wave. That, as I mentioned, group 2 before, in this case it will just be 8, 7, 97 and 96.50, basically 96.50 at the lower end roughly, and then up for wave C. So that's how I think that will play out. But just be mindful that, like we talked about, you know, the same things going up here as well. So that's the SPY. The NASDAQ here, sorry I haven't updated this, but this is, so with the NASDAQ we've got the same thing here as well. So this is the NASDAQ here. So we could look at this as 1 and 2 here on the triple Q and anything else that's like that. Over here we're counting this up yesterday. So we could look at this, we could put this here, we could put, I'll just cut a lot, I won't bug you too much about this, but an A wave here, you can see that it's kind of sharp for the B wave. I suppose you could get 5 waves out of that, but this is such a nice 1, 2, 3, 4, 5 and then down. So look, you could possibly put wave 5 up here, but I just don't know. I mean, so if you put it as wave 5 there, then you'd put the A wave there and the B wave here. So I just think we should let it mature a little bit, because we're in the, once you enter the guessing game, then you know that's where you sort of make mistakes. So I think we'll just leave this for the time being. We know that the market's going to go up further. I mean, the other side to this too really is that even if we looked at that as the A wave here and put wave, let's just look at it a different way just for the sake of it, okay? So we'll put wave 4 there, we'll put wave 5 here, and then what we'll do is we'll look at this as an A wave here, because we've looked at the other wave. That could be the B wave there, and then the C wave down here for this, and then we go up from that point. So that just gives you a bit of an idea, you know, on this as well. So this would just be 1, 2, 3, 4, hit that top there as wave 5 here, come down here back into this space, and then go up for there. So this is a different way to look at it. Not to say that it's right or wrong, it's just different, right? So that's one way of looking at that. When we come over to the NASDAQ over here, it's you know, because on the market that we just looked at, we looked at this as being wave 1 in here, but in this case, yeah, still like wave 4 over here, because this is a bit tricky to count here. We could go 1, 2, 3, 4, 1, 2, 3, 4, 5 for 1 and 2 here. That would leave 1, 2, 3, 4, 5 for the third wave. So that can't go there. So that would have to go there. That would have to go there. And we still need one more to the upside here. And this needs to go up here for that. So I'll just get rid of that here for the time being. So I don't think the A wave's already, I don't think the A wave's done here just yet for this. And this is doing all the right things in terms of a bullish move here. We've got the arrival, the reaction, the first high above the level, the correction, but this is in 5 waves here. So it's a bit difficult to put that over there like that, I have to say. But yeah, and the Russell. So with the Russell here, once again, the 50-60% is up here. What I can say to you, if you get a classic trading levels pattern at the 1800, then you need to be short at that point, because that would be the 61.8% at that spiky low there, I'd imagine, pretty close anyway. So I'll just double check. So yeah, that's on that 61.8%. So that means that if that 1800 became the retested resistance, then you can short it using this particular pattern here, okay? But otherwise, we need to look to the upside, and I can see that we could label this in different ways as well. See, the A wave, if this was a B wave going up here, if this was a B wave here, then this A wave could typically be in like that, right? And then we would look at this as 1 and 2 here, and then going up for 3, 4, and 5 here to finish that off there, if I get that drawn there. But it's also possible that we've got this as yeah, same as the other markets. Let's just check on this a bit further. 100 ticks, what have we got here? Yeah, it's the same problem down. This is the ETF here for that. So it's the same thing here. If I can open this, I'll just see what I've done here. So I've got this as 1 and 2 here, 1, 2, 3, 4, 5 for 1 and 2 and 3 and 4 overlap here, and then wave 5 here, because I must have been able to count 5 waves up in that 1 and 4, and then 1, 2, 3, 4, 5. So in this case, I'm looking for wave A to be up here. So come back to here, and this wave A here might just be here at this point. Once these mature, we'll be able to see them a little bit better. Let me just go to 100 ticks and we'll just take a closer look, see if I've done any homework in here whatsoever. So 5K should do the trick. So, okay, so yeah, I'm still considering this as well. So in this case, we've got, yeah, it's interesting here because we can't count this up as 1 and 2 like we can do in the ETFs here as 1 and 2 here, you know. So kind of we've got to bring them in together. Somehow we've got to bring them together. But we've got 1, 2, 3, 4, 5 for 1 and 2, then 1, 2, 3, 4, 5 for the third wave. So we can bring the fourth wave back here, but we overlap here again at that point, you know. So this obviously counts as 3 waves up here. So we could go 3, 4, and 5 up here, kind of like that a bit better. Let's just see how Friday goes. We know that we need to be short under here as a retested resistance. Okay, we know that much. Let's just allow this to move up. Can you trade long? Yeah. Well, this is 1800 here. This is group 1 above, 1, 2, and 3, and group 2 below. So as you can see here, we've got a classic trading levels pattern sitting on top of the 30 here. So that would be the place to go at, you know, trading long above that high, or even that high would have done the trick as well, or that high. So you can see that we've got support. It tried to get it here, failed, but now it's got support sitting on here. So all you need to do is buy new highs. So, but obviously at the end of the session. So they should push up to 50 at that point. So let's just allow that to be. And we've got the that's just the Russell here. So yeah, in this case here we've got 1, 2, so we've got 3, 4, 5 to go up to here. So we'll hit the 85 and then have wave B at that point. But under the 180 as the resistance, then we can go for the short trade. So we'll try to get a short trade up here. We'll just see what it looks better as it does it. But Friday, you just need to be on the long side. So the DJ here, yeah, so where's the 61.8% at this point? That's there. So we could go all the way up there, you know, as we just counted the other ones here as well. We could probably do that, right, and then have a C wave up here for that, and have this as 1 and 2, and 3, 4, and 5, and finish off there. But I think we also need to be careful that we could just look at that as wave A here. So I'll just need to see after. So Friday be bullish, and then we'll see what it looks like. If we see it tiring on Monday and turning down, well then we'll be all over it. But let's just see where that plays out first. Alrighty, sorry for such a long video, but the good news is you've got the weekend in front of you. Alrighty, cheers.